On Friday, Vice Premier Liu He stated that his country had reached a consensus with the United States in principle on core points of a new trade agreement. That statement comes after word of an agreement in principle on a phase one of a new trade deal, which, according to President Trump, says would be 60% of a completed agreement. Still, many questions remain about whether the U.S. and China will ever reach a completed deal, one that addresses all of the issues seen as critical, like intellectual property protections and more. This is just one of the areas being followed closely right now by Wharton Dean Geoff Garrett, as well as the current issues around the U.S. workforce, income disparity in this country, and more. And it's a pleasure to welcome in Dean Garrett into the studio to kick off our new show. Great to have you. Thanks for joining us today.
Dan, I'm really excited to be here. You know, we've had a fantastic collaboration with Sirius now for really the whole time I've been dean of the school, and to see the focus that we're going to bring now, Wharton expertise with the issues of the day, and I know you'll do a great job in stewarding us through all of those issues.
Thank you, sir. Greatly appreciate the kind words. So let's get to it. The trade dispute, obviously it has been in the news for the last several months. Where do you think we stand right now with all of this conversation back and forth?
Yeah, I think at the end of the day, the trade war is about politics. And actually, that makes me pretty confident that we're going to have at least a phase one deal, in particular because I think Donald Trump needs a win on China. So I think there will be that win. But I don't think we should be too excited about that, because there are some deeper issues that are going to take a lot longer and are much harder. And above all, I think that's the future of innovation and high tech.
So for people that don't follow it closely, a phase one deal, what do you think that would include?
Phase one, most importantly, will be about more guarantees of U.S. exports to China, where agricultural products, soybeans, is probably number one. But I'd expect down the road something like new guaranteed contracts for Boeing would come into play. You know, Boeing's having a lot of problems because of 737 MAX. And then there are supposed to be a couple of other elements about increasing market access, improving the terms that U.S. firms can operate in China. I think there'll be some progress there because there already is momentum. Intellectual property is also included in that.
There's been a lot of conversation about how the farming sector has been impacted by this. Give us your sense of what you have seen and heard of the impact that has been impacted on the farming sector and where they are right now.
Yeah, so again, I think the trade war is really political. So, of course, the Chinese have targeted their own retaliatory tariffs on Trump voters. And again, agriculture was a perfect example there. So, you know, I saw in a recent Donald Trump tweet on phase one, he was talking about patriotic American farmers, which I think tells you everything you need to know. It's about those Trump voters who've been hurt by the tariffs. Phase one of the trade deal's bound to take care of them.
You have followed closely the issue surrounding the trade deficit, and obviously President Trump has talked a lot about that as well. Give us a sense of really what impact there is or is not in this trade deficit issue that the president talks a lot about.
Yeah, so again, I think the trade deficit makes a lot of sense politically, but not nearly so much sense economically. So politically, Donald Trump says, listen, the trade balance is like the win-loss record of your favorite sports team. Exports are good, they create jobs. Imports are bad, they destroy jobs. Therefore, because China's got a winning record against the U.S. must be losing. From sort of big picture international economics, that doesn't make a lot of sense. I think the bottom line story is that the U.S. consumes a lot and China saves a lot. That would lead to a trade deficit. And then the second thing to say is that a lot of the exports from China, think about your favorite iPhone, are actually American companies operating in China,
right.
And all they do is they send the final product back to the U.S. So an iPhone that you or I buys in the U.S. is going to show up as part of the U.S. trade deficit to China. That's not really the way the Apple works or the global economy works today.
Can the U.S. make up the loss of the trade that obviously has been lost over the last several months? I know that they are looking at other countries to try and fill in some of those gaps.
Yeah. So the biggest beneficiary in the last 12 months, certainly the last 6 months, has been Vietnam. And what we're seeing actually is it's a movement of supply chains. China's become a place where a lot of big global firms do final assembly. If there are worries about restrictions in the US of anything that's quote unquote made in China, other countries that can stand in for that supply chain role are going to win. And it looks right now like Vietnam is the big winner there. But you'd expect over time that a whole bunch of other Southeast Asian countries, maybe even India as well, could benefit too.
And those countries just recently got together and we're talking about a new trade pact as well.
Yeah, so we can get really geeky really quickly here. We had the U.S.-led TPP, Trans-Pacific Partnership, that then Donald Trump walked away from. It's still going ahead without the U.S. But the one that China is in, the one that China is championing, is called RCEP, Regional Comprehensive Economic Partnership in Asia, and it's got everybody in it. I think that deal will be signed, but again, it's a symbolic deal. There's not a lot of binding detail there.
We're joined here by Dean Geoffrey Garrett of the Wharton School. You're listening to Wharton Business Daily here on Sirius XM 132. Great to have you as our debut kicks off here on the channel. What do you make is the state of the U.S. economy right now with all of this that has occurred in the trade war over the last 12 months? And you have Wall Street today hitting a record high. The unemployment rate is still very, very low, down around record territory. So how do you view the state of the U.S. economy right now?
I mean, obviously the U.S. economy is strong, but from the standpoint of investors, I think Warren Buffett's got it right. Why are there those cash mountains in Berkshire Hathaway? The answer is because all assets look really expensive right now. We're at the end of a very long cycle, and I think that's why markets are so volatile, because everyone's looking for the thing that will tip the economy negative. So relatively small pieces of news can have, I think, outsized impact on the markets in this environment.
And so that's why when we saw the inverting of the 10-year and the 2-year just a couple of weeks ago, there was a lot of people saying, well, this is a precursor potentially to another recession.
Yeah, and I think the question there is not if, but when.
Right.
And then, 2020 or 2021. I know the betting markets are saying 21 is much more likely than 20. And then I think the bigger, the more important question is it, will that be a correction or a crisis? Again, I'd be expecting correction, but really big geopolitical issues like U.S. China, they're the ones that could make a correction much deeper, I think.
One of the questions going around, and it has been now for several years, regards the state of the U.S. workforce and where we are headed in the future, specifically around automation. How do you think that is going to play out in the years to come?
So there's this incredible disconnect right now, right? Unemployment is at 3.6%. That's beyond full employment. Why is everybody so unhappy or at least anxious? And I think there are two big picture answers to that. One is this reality of stagnant incomes for so many people in the income distribution. But then there's the go forward projection where everyone's worried about AI and what it's going to do to workforce. And by definition, AI means machines doing things that humans used to do. So of course people are worried about the employment future that they have. And I think it's that combination of globalization plus technology which really explains the sort of rise of populism that we've been experiencing, not only in the U.S., but throughout the Western world.
Are there sectors within the U.S. economy that are more potentially susceptible to being impacted by automation in the years to come?
Look, I think the bottom line is pretty straightforward. It's anything that requires repetition and there's a focus on minimizing errors. Machines are going to do that better than people. Now, that doesn't only mean low-skill jobs. It means some pretty high-skill ones as well. So think about accountants or lawyers who are pouring through details of transactions or written records in the case of lawyers. Over time, it's bound to be the case that machines will just do that faster, better, and with fewer errors than humans. Now, that doesn't mean that lawyers and accountants are unemployable, but it means that the skills that they're going to have to focus on aren't the routine ones. It's going to have to be things that require more judgment, more strategy.
So how do you think then that impacts something like education here in the United States moving forward? Because I would think that would be a component that would impact an institution like the Wharton School.
Absolutely. I think education has to be part of the solution. I would say that I'm in higher education, but I really believe it.
Right.
But I don't think it'll be the same education as we've always had.
Right.
We thought that a simple indicator like how many people are going to college. Well, we can't have kind of set and forget degrees. That is, you get educated between 18 and 22 and then you stop. We're going to live in a world of lifelong learning where everyone's going to have to update their skills all the time. Universities should play an active role in that, but that's a world where the entry barriers are really low. So of course we see lots and lots of educational startups leveraging technology. Consulting companies are doing more of this. I think the competition over the lifelong learner is actually going to be a good thing,
right,
because we're just going to have to make sure that the education we provide is really generating powerful employment pathways for learners.
You wrote an interesting opinion piece that appeared in The Hill just a couple of weeks ago, and you talked about kind of the landscape that we are in here in 2019, but you correlated it back to 1929, to the Great Depression.
Yeah.
Explain what you were seeing, what you're seeing now that relates us back to 29.
Well, I was actually thinking about the launch of Downton Abbey, the movie, which probably isn't as good as the TV show. But,
right,
there was always a dark underbelly to Downton Abbey. Everyone's living the high life, drinking champagne out of glass slippers. But the haunting thing that was behind that was the 1930s was about to happen.
Yeah.
So what are the parallels? I think the parallels are at least three. One, flat incomes for lots of people while the high end does very well, which of course means really high inequality.
Yeah.
U.S. inequality is as high today as it was in 1929. And then, the combination of stagnant incomes plus rising inequality leads to populism. And of course, that's what happened in the 30s. We had, not only the rise of fascism in Europe, but remember, the US went isolationist in response to the stock market crash of 1929.
Right.
Now, I'm an optimist by nature, so I really hope and believe the 2020s aren't going to be like the 1930s. But I think we just need a wake-up call. We need to understand that there are some foundations there that look pretty troubling.
Do you think that there is that recognition possible at this point with all, as you said, with all of the countries where there is an element of populism going right now, that there is a recognition that could lead to some issues down the road?
Yeah, I'm not sure we see it. I don't think the Democratic presidential debates, for example, have really been addressing those big issues.
Yeah.
No surprise, everyone's fighting over where they're going to stand on some signature issues like the future of healthcare, but not the bigger picture, maybe with the exception of the Yang Gang.
Yeah.
But, look at the British election that's upcoming over Brexit. I don't know what's going to happen in that election. You've got the two mainstream parties, the Conservatives and Labor. They're looking pretty populist now and kind of out of touch. They don't want to tell voters what's really going on. And, I think we always decry our leaders for not doing a very good job. I think right now, the thing that our leadership class, both political leaders but also business leaders, are falling short on is they're not explaining the way the global economy, the contemporary global tech-enabled economy really works.
Yeah.
And that means there's this massive disconnect between the political debate and what's really going on the ground.
I wanted to end up talking about income inequality since you mentioned it, and it sounds like, from what you just said a moment ago, that your belief is we could be looking at a longer, prolonged period of income inequality, and that maybe we're not at the tipping point where we may see that gap close anytime soon.
Yeah, and I don't think the solution is either a kind of wealth tax, which the Elizabeth Warren proposal, which I think would be pretty hard to implement, or something utopian like Andrew Yang's universal basic income.
Yeah.
I think what we should do is focus more on the private sector and just come to understand this reality that people at the top have done incredibly well. What they need to do is to think much more about including more people in the growth pathway. And again, I think education's a big part of the story. But if I just look, where does my optimism come from? It comes from my view of millennials. I think they're more purpose, more mission-driven than any previous generation. They think about the impact of what they do on the rest of society. And I think that's going to be the story. It won't be massive government reducing inequality. It'll be a change in the way the private sector works and the way the private sector thinks.
Dean Garrett joining us here on Wharton Business Daily here on Sirius XM 132. Dean, thank you for your time. All the best. Thank you, sir.
My real pleasure, and great luck with the show.